Hey everyone, ready for another deep dive? Today we're looking at some seriously impressive stock market wins. Companies that managed to pull off a 1,000% return. Can you believe that?
1,000%.
Yeah, in just 2 years.
Wow.
We're taking this straight from a Motley Fool article from October 31st, 2024.
That's incredible.
I know, right? So think about this. The S&P 500, the usual benchmark for the market, it jumped up 60% in those 2 years.
Which is already way above average.
Exactly. Usually it's around 10% a year. But these companies we're talking about today, they went way beyond that.
Completely blew past it.
We're diving into Summit Therapeutics, that's SMMT, Carvana, CVNA, and of course, Nvidia, NVDA. You've probably heard of 10 baggers, right?
Uh-huh.
Meaning your investment multiplies tenfold.
Yeah.
And that's what happened here. So the big question is it too late to get in on this? Or is there still some growth potential left?
That's a good question.
Mm-hmm.
And that's what we're going to break down today. Each company has its own story, its own path. So by understanding how they got here, we might be able to see where they're headed.
Let's start with Summit Therapeutics, a pharma company that's making some noise with their cancer drug, ivonescimab. The crazy part is, in trials, it actually did better than Keytruda.
Really?
Yeah.
That's a big deal, right? Keytruda is like the EE drug. It's made by Merck, which is a huge company. So for Summit to have something that beats that, well, it's a game changer.
And investors see that, right? Summit's stock has gone way up. Even though they're not making tons of money right now, people are betting on ivonescimab getting approved and becoming like the next big treatment.
Yeah, they're banking on that potential. If the drug gets the green light and doctors start using it, everyone thinks Summit's profits will just explode.
There's always a bet, right?
Always. Those trials were in China. Getting approval here in the U.S., that's a whole other challenge. Different rules, different process. It's not a sure thing at all.
So Summit's value right now is based on hope, on the chance that this drug takes off. That's a risky bet.
Totally. With a company like Summit, at this stage, you're investing in what might be, not what is. It could pay off big time, but it could also,
Not work out.
Right.
Okay, let's shift gears to Carvana. They're like the online giants for buying used cars. Their stock has jumped up too, partly because interest rates are dropping, so car loans are looking better.
Right. Lower rates make it easier to borrow money. And for a big purchase like a car, that makes a difference.
And Carvana started making a profit, which makes investors feel more confident. But they've had some rough times in the past.
Oh, for sure. But here's something interesting. If the economy takes a dip, which a lot of people are predicting, Carvana might actually do well.
Wait, really?
Yeah. Think about it. When money's tight, people don't buy new cars, they go for used ones, right? And that's where Carvana comes in.
So they're kind of protected if there's a recession?
To a point. Their profit margins are pretty thin, like less than 20%. That means if things go wrong, they don't have a lot of wiggle room.
And remember back in 2022, their stock dropped like a rock, almost 98%. So yeah, high rewards come with high risks.
Absolutely. Companies like Carvana, they can grow super fast, but they're also sensitive to any changes in the market.
All right, now for Nvidia, which only went up 906%.
Huh, only.
Well, compared to the others, it seems small, but still amazing, right?
Oh yeah, 906% is fantastic. It's still a huge return.
And Nvidia is basically the king of AI chips. If you want to use AI, you need their products.
They're completely dominating that market. Demand's so high, they have a year-long waiting list, even if you're willing to pay a premium.
Like trying to get Super Bowl tickets, everyone wants in.
Exactly. And that's great for Nvidia. High demand, limited supply, they can basically set their prices, which means more revenue and more profit.
And we see that in the numbers, right? In July 2024, their sales went up 122%, a record-breaking $30 billion.
And their data center revenue, which is mostly AI-related, that jumped up a whopping 154%. They're riding the AI wave perfectly.
But of course, there's a but. Nvidia is already huge, valued at almost $3.5 trillion. Does that mean there's not much room left for growth, percentage-wise?
That's a good question to think about. When a company gets that big, it's harder to keep growing at the same pace. It's like trying to push a boulder uphill.
Yeah.
The bigger it is, the harder it gets. So investors have to ask themselves, is there enough potential for long-term growth to justify that giant price tag?
Yeah, that's the key for investors, right? Are they buying into the hype, or are they buying into a company that's going to keep growing, keep innovating for years down the line?
It's like, are you betting on the old, reliable racehorse, the one with a track record? Or are you going for the new, exciting horse that might be the next big champion?
Exactly. And there's no right answer. It comes down to your own risk tolerance, what your goals are as an investor. It's all about your strategy. So let's take a minute to look back at these 3 10-bagger companies. We started with Summit Therapeutics with that cancer drug, ivonescimab. Really promising, but they've got to get through all those regulations, especially here in the U.S.
And that's important to remember, right? A lot of Summit's value right now is riding on the idea that ivonescimab will get approved, that it'll be a big hit. That's not a guarantee.
Then we looked at Carvana, shaking up the used car world. Up and down, up and down. Remember that crash in 2022? But they came back strong. Lower interest rates and making a profit helped get investors excited.
But those profit margins, they're still pretty thin. Less cushion if something goes wrong. They've been resilient so far. But can they keep that up?
And finally, Nvidia, the big name in AI chips. They're riding high on this AI wave, making billions, no signs of slowing down.
But they're already massive, and their stock price is already through the roof.
Yeah.
That might limit how much more they can grow, percentage-wise at least, like trying to squeeze more juice out of an orange that's already been squeezed dry.
So what's the takeaway here? Even when the market's doing well, like a lot of companies are now, there's still risks to think about.
Definitely. No such thing as a sure bet in the stock market. Every investment has potential rewards, but also potential risks.
Gotta weigh both sides. Do your research, understand the company, and be honest about how much risk you can handle. Don't just jump on the bandwagon because everyone else is.
Couldn't agree more. The best investors, they think things through. They look at both sides, the good and the bad. They make decisions that fit their goals, their comfort level with risk.
So here's something to think about as you keep learning about investing. If you had to choose one of these companies, Summit Therapeutics, Carvana, or Nvidia, which one would you feel best investing in?
And even more importantly, why? What part of their story speaks to you? What makes you think they'll succeed in the long run?
Investing, it's a personal journey. What works for one person might not work for another. It's about finding what's right for you, your situation, your goals.
And don't stop learning. The world of investing, it's always changing. Keep up with it, adapt your strategies, and get different points of view.
Yeah, at the end of the day, the best investment is always in yourself, in learning more. The more you know about companies, industries, the whole market, the better choices you'll make.
For sure. And don't just stick to one source. Look around, read different reports, listen to podcasts like this one, talk to other investors, even get advice from a financial advisor. The more info you have, the better you understand things.
And this deep dive, it wasn't just about picking stocks. It was about getting a feel for how the market works, spotting those trends, seeing those companies that are really pushing the boundaries. It's about you becoming a smarter investor, making better decisions.
That's what I love about investing, is like looking into the future. You know, you're part of how the technology changes, how healthcare changes, the whole global economy. It's fascinating.
So we've talked about these incredible success stories, companies that saw huge growth. But as we wrap up, I want to leave you with something to think about. What other companies are out there, maybe ones we haven't heard much about, that could be the next big thing, the next 10 baggers?
That's the challenge, right? And the exciting part. Finding those hidden gems before everyone else does. Seeing the potential before it explodes.
So yeah, keep your eyes open, stay curious, and who knows, you might just find that next big opportunity.
Happy investing, everyone.
And that's it for this deep dive. Catch you next time.